Let's talk about China's subsidized manufacturing foot soldiers. It all starts with the Chinese state-owned companies, being funded by the Chinese state-owned banks. These banks are then funded by the Chinese government's very own People's Bank of China. These fund the manufacturing war machine of zombie companies, acting as paid foot soldiers to take out the global competition. This is not free trade. It's a Chinese financial weapon to replace production abroad. China can lose money in the first 10 years. Have the Chinese banks subsidize their domestic companies until the global competition dies off, and win from there. These types of zombie companies are unable to cover interest costs from operations. By 2025, these zombie firms controlled roughly 16% of China's non-financial corporate assets. Excess production was pushed abroad to mask the domestic slowdown in China by increasing exports to other countries. Inflation wasn't a concern in China, as their recession deflation offsets the increased money liquidity inflation. The perfect mask to implement this financial weapon. China exported over 100 million metric tons of steel in 2025, undercutting global producers by 20% to over 50%. Chinese automakers shipped more than 2.5 million new energy vehicles, undercutting competition by a similar 20 to 50%. China's solar exports surged as panel prices collapsed nearly 60% since 2022, driving losses across the global industry. Germany's steel and auto sectors saw margins implode. Europe's petrochemical sector now faces extinction. Countries must choose to protect their domestic industries from China's subsidized zombie company foot soldiers or risk unemployment in that country. Consider tariffs.